Hey traders, this is Blake Morrow with Traders Summit, and with us today is one of our contributors, Bill Baruch, and he's with Blue Line Futures, and he's the perfect guy to talk about this big move that we've seen in commodities. Bill, welcome back.
Thanks for having me on again. It's not again, but here to join you.
It's great to have you here. And I know a lot of our listeners and a lot of our readers, they love reading your intraday commentary every day here on Traders Summit. But we have just seen the Fed make some comments, obviously, as of yesterday, following the FOMC rate decision. But more importantly, it's the market reaction. And we're seeing the dollar extend gains today on the second day. We're seeing rates move all over the place. We're seeing commodities really come off. And since you trade a lot of commodities and a lot of futures, what's your take on what the Fed has done and the market's reaction to everything over the last 24 hours?
I do think that the Fed sort of stayed in line overall with what was anticipated, but they made some adjustments. I think more minor. I think some of it to be expected. Obviously, the dot plot shows two potential rate hikes through 2023 and 2023. That moved up from 2024. You also have inflation expectations being revised higher from 2.4% on the year to 3.4%. They're acknowledging what we've seen, and those are reasons to think the dollar should strengthen. Those are reasons to curtail a little bit of the commodity froth, if you will. But I mean, you look across the board. I mean, it's a bloodbath in a lot of commodities, and I think it is getting a little overblown, a little exacerbated. But I do think it's not only the Fed. You got as well earlier this week. Metals in particular. China had said they're going to release some reserves. So I think there's just some soft footing in the metals and frothiness and other commodities that are overall coming in.
So that we've seen an extended move in gold. We're back below 1,800. How far do you think that this move in gold and silver might last?
Well, I don't want to pretend that I thought it was going to go this low. I didn't think we would be really breaking below 1,800 and maybe just sticking our neck below there through the New York Open this morning and shaking out some weak longs and we'd snap probably back, and settle the day maybe just below 1,830, which was a critical level in my mind. It just keeps going. There really doesn't seem to be very many bids out there. It definitely feels to be unwinding a little bit. People who are long, gold's rallied with 15% or so since the bottom in March. And it's been, almost a straight ascent. So yeah. Is it to be expected to have a bloodbath like this? No, but it is expected to come in a bit. And there was a big failure late last week in gold. So we're what, $130 from there now.
Yeah. And, so we're now starting to see a little bit of reaction in crude oil. Crude oil is trading below 71. We've got copper coming off. And you made a point about the Fed. They revised their inflation forecast higher, but we've seen a big move lower in lumber already. Copper starting to correct. We're now starting to see crude oil maybe a little toppy. So my last question to you would be, is the Fed right in anticipating this inflationary pressure that we're seeing and we have seen as of late? Is it really transitory? Is that what the market's telling us? What do you think?
I think that's such a great question because I've been calling this transitory. If your viewers have been reading some of the stuff that I've been putting on your site, I've been very adamant that this is transitory. But the problem the Fed did yesterday, and I've applauded them. I've been outright applauding them. I think they've done a terrific job. I do think they made a small mistake. I'm not going to be the critic that everybody's a critic of the Fed. I still think they've done a terrific job. But by moving those inflation expectations up, they're sort of, by the degree that they moved them, I mean, they're sort of trading the markets. They're becoming reactionary to the market. Now the market is being reactionary to them. If they really believe that this was transitory, then why are they increasing inflation expectations as much as they are? Because in my mind, going into this last meeting, I thought I was on the same page as them. And I thought that we were going to see inflation through April, May, June. And then from there, it was going to start to taper off. We were going to see the economy reopen. We had money in people's pockets coming from March. There was going to be demand that picked up all the reopenings. And it was going to be April with low base case numbers from last year that we're going to see high inflation numbers off of, which was expected. You're going to see continued distorted supply chains that were going to last through May. You're going to see airfares and used cars as well. Prices pick up. And that was all to be expected. Now, if this was going to be transitory, then what I was looking at was July and August numbers. And I put a lot of emphasis on what to expect for July and August, because those were higher base numbers, and then it leads into that next quarterly Fed meeting. So I anticipated them to hold ground a bit more and not really bring those inflation expectations up. They're almost reactionary as a trader rather than really getting through the thick of what they were expecting to happen. So the market's reacting to that. And again, I think there's definitely some unwinding of longs and metals. There's some dumping. China had acknowledged that they would sell some reserves. So it's, I think the metals are leading the way to the downside. You have lumber coming off highs, but, you get prices down like this. And what do you have? You have less inflation, right? So, we could be looking at some transitory effects that we really see through July and August again.
Wow. Well, Bill, I tell you, for those of you that are watching right now, if you don't listen to Bill, his updates throughout the course of the day that are posted on the Trader Summit site, I highly recommend it, because Bill, I love seeing you on CNBC, and I especially love seeing you here. Thanks for joining us today, and I look forward to our next conversation.
Thank you.